Okay, I just want to do a quick video on market structure, but I'm going to be demonstrating this on a live chart for S&P 500, also known as SPX500. So remember, when we structure can apply to any time frame. It can apply to any time frame, 1 hour, daily time frame, whatever. But when we look at structure, we look at the overall movement of the market. Where is the market going overall? Let's just mark this I want to focus around this level. Let me just first draw a box that will indicate which level do I, or which zone do I want to focus on as I go through the video and explaining structure to you guys. And I want to change this to a color, a neutral color that will be more visible for you to see. Let's see, what color can I use? No, okay, this is for the borders. Let's see, what colors can I use? Okay, I think this will be no, right. Let me check for a different color. Okay, I think this will be fine. So the focus is around this box now, yeah? So let's say we were looking at structure on a 1 hour time frame. If market is trending down, this will be a downtrend. It's a downtrend. This is a downtrend. This is a downtrend. Let me just make this black as well so that it can be much more visible. So this is a downtrend, meaning we are only looking for selling opportunities in this case. But a downtrend on a 4 hour will look like this, but a downtrend on a 1 hour, it will look way too different. There's gonna be pullbacks, pull up. Okay, let me just write it down for you quickly. Market structure will look like, if it's a downtrend, you'll see down, pullback, down, pullback, down. That is what you'll see. Meaning now, if we zoom into 15 minutes or 1 hour, that's what we'll notice. Let's start from 1 hour. Remember, now we are just focusing where we are focusing on this downtrend. What do you see? What do you see on this downtrend? What do you see on this downtrend? What I see is a move to the downside, bit of a pullback, move to the downside. Let's see, pullback to the downside, pullback to the downside, pullback to the downside. So what we want to trade, what? We want to trade the pullbacks. If market drops, then after the drop, you want to go in with a sell. Let's just go to a 15-minute time frame. It's going to be much more visible, because from a, okay, let me try and get this downtrend. Where is it? Okay, my internet is loading very slow, but we're gonna get there. Just want you to see this on a live chart. How do we trade structure? How do you now enter trades on structure? Okay, it's still loading slow. Okay, now, so there we go. So as you can see, we are now down to 15 minutes. Market was going down in this case. Let me just throw it down for you. This is what you'll see on a downtrend. Just mark it down. Where is the, okay, this is what I'll use. Let's say they move to the downside, started maybe here. You have a downwards movement, then you have a correction. After the correction, when markets start going down, that is when you look to do what? Sell at this point. Maybe sell at this point, go down, go down, go down, get to this point, it makes another correction, then again look for opportunities to sell when it starts to go down. Again, a correction, then when it starts to go down, you look for opportunities to sell, or you sell at the break of the low. If you notice here, same thing over and over is happening. Market goes down, it makes a correction, it continues to the downside, makes another correction. But in every correction that the market is making, it's not breaking structure. what will be your structural point in this case? I want to draft down your structure in this case. We can start from the top again. I would say if this was a downtrend, if market went down, then make a correction. Your correctional point, the last point of correction, is your structure. These are your structure point. These are your structure point. I want to draft them down to you. These are your structure point. These are all your structure point. These are all your structure point. These are all your structural point around this level. These are all your structural point. Meaning now, if it happens that market now comes to this structural point and start going to the opposite direction, then that means market structure has been broken on that time frame. Then you can look to go to the opposite direction. Okay, now let's switch it over. Let's go to a higher time frame and do the same thing again. I want to show you this thing on a higher time frame now, because now we're talking about the smaller time frame where you're now looking for entries now. So what you do is you look at the higher time frame for market direction, then you use the smaller time frame for your entry points. Then now, how do you determine that now the structure is now broken? Is like this. Okay, we had market going down, then we had market now reversing to the upside. I will take this as a pullback of the move to the downside. Okay, let me just start afresh with a clear. So we have something like this. We have market. Sorry about the ads. We have market going down this point. Then we have market pulling back. We have market continuing to the downside, but now stops right here. Then where is your structure in this case? Your structure will be around here, the last pullback point. This will be your structure. This will be your structure in this case. Let me just make this black so that it is more visible. Then let's say market comes back like it did, went up, but now breaks above structure. Now the structure has been broken where? Around here. Structure has been broken. Then market came back, retest structure. Then it continued higher. Made a move like this. Continue higher. Where is your last point of structure now in this case? So market now is now on uptrend. Your last point of structure now will be around here. Why did I delete that? Okay. Your last point of structure, it went up, did a pullback. This will be your last point of structure here. So now if market breaks below this point, now the structure to the upside has now been broken. Now we're looking to go for a sell. So look at what market did. From here, dropped, broke structure, meaning now we are looking to sell. So from here till here, you're looking for selling opportunities. Again, it formed the last point of structure here. Now it's going higher, as you can see. Where is my structure point at this point? I would say my structure is here. And now my structure looks like it's getting broken. Practically it is broken. So what you're now looking at, you're looking for buying opportunities. So you know from this for how many candles, 3 candles going up, you are looking for buying opportunities. What you will do then, you go to smaller time frames, then you check for, and this will be also your critical point in this case. This will be your critical point. Let me draw it out for you. This will be your critical point in this case. This will be a critical point because market might come and find confluence here and turn, because this is another point of structure. It's an important point of structure. But what market will do now going up, you will see something like up, pull back, up, pull back, up, pullback. Let's see, let's go on a small time frame and see. Our focus is where now we are focusing here on this move, but now we'll have to play around the 15-minute time frame so that we find our entries around those levels. Now we are on a 15-minute time frame. Now look at this. If it makes sense, then we have a move to the upside, got a bit of a correction. After the correction, another move higher, another move higher after the correction, a small correction again. This is not much of a big correction. Another move higher, which broke structure around here. Now chances are we might get what, a retest of structure, then a continuation of the move higher, then we continue buying like that until on a higher time frame structure to the upside has been broken. Then we'll look to go to the opposite direction, meaning we'll look to start now selling. So that is how structure is explained in a simpler form. Practically what I was trying to show you here is that it is ideal to look at structure from a higher time frame. Then you look at your entries, you take your entries from a smaller time frame. Again, if structure is not broken, then you are not looking for any selling opportunities. Let me just also jump into NAS 100 again quickly, because let me jump into NAS 100. I want to show you structure on NAS. Let's see. Okay, at least everything has been drawn out for you. It's clear that the structure in this case was down. It's actually down. We are still on a down structure. So now the focus here will be around this level. Let me just draw it out for you so that you can see. The focus is around, where is the focus? The focus is around here. From here till here, that is where we are focusing now. We're looking at the market from this point. It's just simple and it's clear. This is a downtrend. You don't even need a scientist to tell you this is a downtrend. But in a downtrend, you can see we had some down move, we had some correction, down move, correction. And if you can zoom in here on a 1 hour time frame or 15-minute time frame, you will always find entries on the smaller time frame. But I don't want to do that. I want to just mark out points of structures, but I want to mark points of structures on a 1 hour time frame so that we makes it simple for us to see where are we in terms of structure. Actually, points of structures have been marked for you already. I've already done the marking because we had market dropping, we had market coming back for a pullback, more of a consolidation, correction, market dropping again, a smaller pullback, same thing happened. So these are your points of structures. If market breaks around this point, then we'll look to go the other way. So right now we are looking at market. This is your structure. This is our new support because this was the low that was formed by market. Market decided to come at this point and form this low. So actually this was the low. Let me just mark it correct. This was our low. Then it came back, retested this low. So now it formed a new support structure. That is why we're seeing market pushing up and it broke this trend line. Now it's going higher. We're expecting market to come to this level of structure. They need to decide if it breaks above this level of structure, then we'll look to buy it. It means it's no longer a sell structure. We're no longer selling in this market. But if it comes to structure and touch but don't break structure, if it touches structure then go down, then we'll look to sell. Now the next key area to look at will be your support. If it breaks below your support, then we'll look to continue selling. Okay, so I hope you understand how market structure works and how you can take advantage of trading market structure. Again guys, don't forget to subscribe to my channel, subscribe and share this video to whoever that might want this. On the description of this video, I have information about broker recommendation, broker that you can use to trade indices, and also a broker that you can use to trade currencies. Again, I have my contact details on the description of the video. If you want assistance in trading advice or whatever you can call it, you can just contact me on the details below. All the best for the week.